Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Wednesday, July the 7th, 2010, and it's time for us to have a look at these markets and figure out what's going on out there. Let's check it out. And we told you last week that we'd expect to bounce sometime this week because of the oversold conditions, and we'd had, this is the Dow Jones, we'd had 1, 2, 3, 4, 5, 6, 7 consecutive days to the downside, and they told us to look for a bounce. And so here we are, and we're getting that bounce. If you were following us from last week, you know that your stop was down here. You got stopped out on Tuesday, first day the market was open back here in the U.S. after our 3-day holiday, and now we're making a move to the upside. Okay, what does all this mean? It's to me absolutely nothing. It's a bounce. It's on low volume. It's a big move. You 274 points on the Dow Jones Industrial Average today. That is a big move to the upside, but we've seen that before. Main thing to look at here, you're looking at these oversold conditions right here. You've had 7 days to the downsides, things like this. All of that promotes a bounce. Okay, so that's what you got. You got this nice little bounce to the upside. But I got a couple questions to ask you. Number one, what has changed? Back here, all right, you are in a bullish trend. You had bullish signals. You had a nice hammer formation, all this stuff, and you rallied and rallied and rallied and rallied, and you got shot down because of fundamentals. All right. Now during this bad sell-off, you learned about more bad fundamentals that are still out there. So now you've broken down below this trend line right here. You are not showing this the same strength in the reversal signals as you had back here. Back here it was a weak hammer, but here it's just a sickly looking one. And the following candlestick off of that was an inverted hammer telling you that this is going to break down. Exact same thing that we've seen before. Let's look at that right quick. Right here you had a reversal signal followed by an inverted hammer. That red hammer that looks like an arrow pointing down, yeah, that's an inverted hammer. Same thing right there, okay? These are telltale signs, warnings telling you that this is not going to last. And sure enough, boom, she falls apart, all right? Now you've got the same thing right off the bat, right there, and then we followed it up today with a rally at the upside. That's fine. I don't mind the bounce. We'll show you how to use that in a minute. You'll also notice now you've got worsening conditions from a technical perspective. You've got the bearish crossover of the 50-day and 200-day moving average. Nothing good about that. So my overall point and thing you should be taking away from this video is if you couldn't, with conditions that you had before, more bullish, make any headway here, and you got shot back down and lost the ground based on the fundamentals, how are you now going to go up here and make a new high? You're absolutely not. I know that. Now you do. So you can bounce all day long, but there's just one slight problem with your theory. I'm waiting, and got a whole bunch of people that follow whatever I say here, and we're all, been making pretty good coin here because we know how to play this game. You see this line right here? Yeah. Once you get up there, game's over. We will short you back to the Stone Age. So you do whatever you want between now and then. Once this slow stodge gets back up here, we'll be on you like white on rice. All right? Yeah. Basically, if you're following our formula and making lots of coin, what you ought to be doing right now is just waiting. Let that thing bounce. Let it get as high as it wants to get. And we'll be waiting for it right up here. So we'll start looking for entry points as soon as we start getting stocks in the market with the overbought condition of the slow stodge. That's our timing tool. It works every single time. All right. Perfect. Quick look at the FTSE. You can see we got the exact same bounce condition going on here. Exact same story overall. We bounced over here, got shot down because of fundamental problems in Europe. Those fundamental problems are still there and growing. So a bounce here, believing that you're going to make a new high, is absolutely ridiculous in my opinion. So let it bounce, wait for it up here just like we did back here, and we'll be waiting. Yeah, it's coming. We have the exact same condition on the NASDAQ. This is a 6-month chart. Each candlestick is a day. You'll see we're bouncing here as well. Oversold condition here. And when she moves back up here, we'll be on it. And the main thing that you got to always pay attention to on any major move to the upside, we already know we're in an overall downtrend. We've shown you that several times, several different ways. But the main thing looking at the bounce here is you want to look at the volume. All right, let's have a look at the NASDAQ real quick. Yeah, what is that? It's volume, but it's less than average. It's nothing to write home about. And you'll notice smart money, yeah, they're staying short. All right, you got a bounce here. That's great, but it's a low volume bounce. We've seen this before here. Yeah, didn't do much, and had a little bit in here somewhere. Some of it was buying, some of it was selling, so we'll just leave that one alone. But either way, it doesn't last when you have those low volume rallies like that, okay? It's a telltale sign that something is not copacetic, so you just want to let the bounce happen and then short it. Quick look at the volume on the Dow Jones Industrial Average, 6-month chart, each candlestick is a day. Pretty obvious. Smart money, it's got a lot of money. When they move, you can see them, and it's pretty obvious what they're doing, huh? That's not buy volume, baby. No. And the buy volume, very weak, okay? So, nothing to do but short, short, short some more, short a little bit more. Just wait, time it. By time it, I mean wait for the market to get overbought at above the 80 line. And that's when you start loading the boats, okay? Very simple. Why are we so bearish overall? Let's have a look at the long-term charts. Looking at the Dow Jones as a 4-year weekly chart, we have several reasons to be a bear here. Number one, look at the previous week's candlestick. It's a continuation signal to the downside, not a hammer formation. This is not the bottom, plain and simple. As confirmed on our 6-month daily chart, as well as they had that inverted hammer. You can go back and watch that. And you've also got these conditions. We talked about these before. You'll notice back here, each one of these low points coincide with the low point on the chart. This one to this one, and this one to this one. This was trending lower, while this was trending higher. The end result, this is called a divergence, where you want to trust the RSI, not the price activity. Price lies to you. And sure enough, this will end up breaking down, and that's exactly what happened. Okay, had you known that, by watching that, you would have made it, or saved, or made a ton of money, okay? Here, same condition, reversed. This one is telling you move to the upside, by the uptrend right here. This one's telling you move to the downside, the downturn there. I just spotted that, played it the right way, make a ton of money. Okay, last but not least, this guy here goes to this guy. This low point here correlates to this guy. This is showing a downtrend. This is showing an uptrend. Someone's lying to you. That tells you that this low point right there is going to get taken out. You know that because this one took it out. So this low point right here is going to get taken out. So price will do that. Yes. What else we got? Well, Carl, we've got this thing called the head and shoulders pattern. Yeah, right there. Right there. Right there. Big old sell signal. Why is that a problem? Because you've seen it before, just before the crash. And if you look back at the 1930s chart, yeah, it was there as well. Very nasty. Very, very nasty. If you've not been to our free website at perfectstockalert.com, 100% free. All we ask in return, you refer a friend. And please subscribe to our YouTube channel. That helps us stay free, helps support our services here. As I've told you guys before, it costs me thousands of dollars every month to provide this service to you guys. I don't mind doing that as long as we're growing. And as long as everybody's referring a friend, hey, we're growing. So as a matter of fact, this month we've already covered 15% of the cost, of the monthly cost of providing this service. So that's a lot better than back when I was paying 100% of the service. So now I'm only paying about 85%. So that's cool. Just keep growing like that, and sooner or later, this thing will actually be paying for itself, and I won't have to, hit you guys with sticks and things like that. Awesome. Have a look at our disclaimer. The disclaimer. The information provided you can read. All right, I'm going to be waiting for the overbought condition of the slow stops before I take any new short positions, so be, aware of that. We have all kinds of alerts on our website every single night, and market analysis every single night for those of you guys who ask. So God bless. Enjoy the evening. Let's keep making that money. Let this bounce do whatever it wants to do. We'll be waiting for it.